MPs are urging HMRC to take a good hard look at Russian oligarch Roman Abramovich's tax bill, which could be a whopping £1 billion. My name is Jack Reeves and welcome to this week's episode of Tax Tidbits, where leaked documents suggest that £4.7 billion of Abramovich's investments were routed through British Virgin Islands companies, overseen by a close associate. This associate had sweeping control over these investments while living in the UK, and so since this money may have been managed from the UK, Abramovich might actually owe tax here. Abramovich's lawyers insisted he followed expert advice, probably the same kind that tells you offshore accounts are just fancy piggy banks. HMRC has confirmed that they are committed to ensuring everyone pays the right tax under the law, regardless of wealth or status. It's bad news for wine lovers this week. Your favourite bottle is about to get pricier. As of Saturday, February 1st, alcohol duty for wine and spirit has gone up, meaning a bottle of 14.5% red wine will cost 54p more and a bottle of gin will increase by 32p. These tax increases have been put in place to promote public health and support smaller producers, but I think it's fair to say the drinks industry thinks this is a bit of a buzzkill, as higher taxes mean fewer sales and ironically less cash for the treasury. There is one silver lining though, as pints in the pub are getting a tiny tax cut of around 1p per pint. Try not to spend it all at once. Trump hasn't confirmed if he'll slap tariffs on the UK, but his trade war could still cause some chaos over here. If he imposes high tariffs on other countries, the UK could feel the fallout, like slower global growth, disrupted supply chains, and cheap tariff-dodging goods flooding our market. The UK technically has a £71 billion trade surplus with the US, unless you ask America, who claims they sell more to the UK than they buy from us. If Trump does target Britain, exports like cars, meds and machinery could take a hit. And even if he leaves us alone, rising US interest rates could make borrowing here more expensive. Long story short, whether or not Trump swings the tariff hammer, the UK economy might still get a headache. Over 1 million people missed the tax return deadline, meaning HMRC is now handing out £100 fines like confetti, unless you've got an excuse that could win an Oscar. While 11.5 million managed to file on time, including 31,000 last-minute thrill seekers, the stragglers could rack up even bigger penalties if they keep putting it off. Some taxpayers had an extra stressful deadline day thanks to Barclays' IT meltdown, though the bank promises no one will be left out of pocket because of delayed payments caused by these issues. Good news for those that deal with payroll. HMRC has scrapped its plan to make employers report detailed employee hours data, saving businesses a major administrative headache. Originally set for 2025, then delayed to 2026, the proposal has now been binned after feedback made it clear it would be a costly and time-consuming nightmare. So now businesses and accountants who are already juggling tax changes like making tax digital can now breathe a sigh of relief. And that's a wrap on this week's episode of Tax Tidbits. If you liked this video, make sure to give it a thumbs up and subscribe to our channel so you don't miss any of our videos. See you next week.